Hello Wolfpack. Bitcoin has seen a massive move to the upside relative to the recent low volatility it's been seeing for the last 3 or 4 months. And we've moved upwards, and so the DXY has gone down, and the bond yields have gone down as well, and the S&P 500 and the Nasdaq have gone up. Is this the time to buy Bitcoin? Has Bitcoin confirmed the bear market bottom? Let's get into the video. Bitcoin has seen a massive move to the upside. We've not only broken the pink downtrending line stemming from June, as you can see here, actually from May. We've also broken the blue triangular formation of a small time frame, and we've also broken the daily RSI triangle. On top of this, let's just keep going down the list. We've broken the 50 SMA, which is one of the namely things we've done there. And on top of that, we've broken 19.6K, which is the 2017 all-time high resistance. As you can see on the chart here, we've been rejected off that a few times on local timeframes. So we've made a big move, okay? Big move has been made. It's good progress for Bitcoin. And the question now is, well, is the bottom in? Can we buy yet? Is that enough confirmation? My simple answer to that is no. That is not enough confirmation. And I will explain to you when there will be enough confirmation right now. The confirmation for buying Bitcoin, in my opinion, would be this. And this is as per my buying plan that we re-established just a few days ago. Look at the third scenario here on the buying plan. There's 3 scenarios, covers all the possibilities for Bitcoin. This is the third scenario looking at right now. We would buy 50% at a breakout of 20.8K. That breakout of 20.8K would have to be convincing, and it'd have to be on a daily chart breakout, right? So a daily candle above 20.8K. Now, where is that? That is above this red box. This red box here on Bitcoin is 20.8K. If we get a daily candle close on Bitcoin above that box convincingly, not only would we break the box, right? Not only would we break the box, we'd also break into the bull market support band, we'd break the local resistance around it, and we'd see the start of that volatility start to come in after a period of very low volatility. We'd also likely make a move, depending on when it happens, above the 50 SMA on the 3-day chart. There's many things that could happen. It would also fully confirm a breakout of the 3-day downtrending RSI resistance line. Let's look at that. 3-day downtrending RSI resistance line stemming from January 2021. It would fully confirm that break. Right now we're seeing a speculative break because we haven't seen a 3-day candle close. So yeah, there's a lot of things that would happen if we did break 20.8K. And as I said, if we get that, if we get that daily candle close above 20.8K, I would be buying. Okay, I would be buying as per the buying plan here. Now, for someone who's very conservative, and this is very much worth saying, right? This is very much worth saying. For someone who is very conservative for trades, they don't want to lose money at all, they don't want to be stuffed around at all, I'd actually be waiting for November 2nd, right? And I know you'd say, oh, that's a long time away. Well, November 2nd is very important, okay? And I do see there, I do see it as a positive, because look, here's the thing, right? I'll backtrack for a second. I don't think that this third scenario is healthy for Bitcoin. I think the 4-year cycle determines that we need a Q4 bottom. I've gone over to that, gone on that in the past, over and over and over again. In fact, I predicted the top in November 2021 based on the 4-year cycle theory. 4-year cycle predicts a Q4 bottom. I would expect to see that. So if we do see a break above 20.8K, part of me wouldn't be comfortable. Now, I'd still buy because I have to trust for TA, right? But I wouldn't necessarily assume that that would be a macro reversal. I would more think that's a good place to buy for a swing trade, right? That's very important to know, because I'm a very big believer in the Q4 bottom. It would take a lot for me to disbelieve in that. In fact, it'd take us to be out of Q4 and not bottomed yet, and bottomed out. So say we enter January and we've clearly bottomed out. We're at 30K. Then obviously I'd invalidate at that point. That doesn't mean I'm not going to trust the buying plan. That doesn't mean I'm not going to buy at 20.8K. It just means that if we do break 20.8K, I will be skeptical about the long-term macro structure. It would not be healthy in my opinion. I'd still buy, but what I do think decisively, and this is something that I've stuck by for months on end, ever since we lost this region, I do 100% believe, and again, stuck by this for months and months, I 100% believe that a full macro trend reversal, in order for us to say, okay, the bear market is over, we need to break 28.6K. Why is that? Well, it's very extensive reasoning. Let's get into it. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megawell Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. Looking at macro structures for Bitcoin, we can pretty clearly see one thing. Bitcoin generally sees a horizontal consolidation zone before it finally breaks down. After the horizontal consolidation, it sees one capitulation, and that is the bottom. We saw that in 2015 at around 323. We saw that in 2018 at around 6,000. And we saw that here on Bitcoin in 2021 at around 28.6k. I'm just going to give it rough there. So what I will say is this: every time we've gotten back above that horizontal consolidation zone in the past, so we've come down, bottomed out, got back above it, we enter a parabolic market. Now the exception is 2020 during the COVID drop, but the COVID drop doesn't count. It's a black swan event. Doesn't the TA in that price region is completely ridiculous. If COVID didn't happen, we would have just gone sideways, right? So that would have counted as a parabolic move. And so, sorry, I would assume that once we get above 28.6k, which is of course the horizontal consolidation region in this bear market currently, we would start to see some significant upside trajectory on Bitcoin, and hence I would believe that the bear market would be fully over and the bottom would be fully confirmed. So that's interesting to note. So yes, I will 100% be sticking to the buying plan. If we do get a daily close, a convincing daily close over 20.8k, I will be buying, of course. Now, look, I don't see it as incredibly likely, just based on macro that I'm going to look at in a second, and obviously 4-year cycle as well. I just simply can't believe it is incredibly likely. If I believe in the 4-year cycle theory, it's something that I can't necessarily believe. It's hypocritical to believe it. So what I would say is this: I would certainly buy, but I would be 100% expecting a swing trade rather than a macro reversal at that point. I'd still be expecting a lower low. So yes, we'd buy, but we'd sell, and then we'd buy back at the actual low. Look, that's just speculation about what would happen. Obviously, we're talking about a bit in the future here in a hypothetical scenario. So we'd obviously have to analyze it as it happened, but that would be my opinion there. So the main point here is just this, right? If we do get a daily close above 20.8k, that's when we start to look good. As of right now, yes, we've seen up price action. Yes, it's been very good in the short term. But at this point in time, there's no reason to believe this isn't a fake out. There's simply no reason to believe. Yes, we've taken some critical levels back, but based on the 4-year cycle, based on macro trends, based on what typically happens during bear markets, yeah, no, this is probably a fake out, in my opinion here. And even if we're looking at the S&P 500, right? S&P 500, as we know, traditional markets and Bitcoin, pretty closely connected, not perfect. They do see different dates and bottoms and tops, but they are pretty closely connected. This thing's not looking good, right? And you might think, well, how's it not looking good? Well, first of all, we've got a def cross on the 3-day chart coming in. Look back historically, do yourself a favor, go on the S&P 500 chart, go to when we usually see def crosses. Actually, let me if we're finding fractals of 3-day def crosses on the S&P 500, all we need to do is go back to 2008. And as you guys know, 2008 is extremely similar in terms of price action structure to the current bear market in the S&P 500. In fact, it looks basically identical. We've looked at that fractal in the past. In fact, we'll bring it up right now in a second. But you can see that it was the def cross that triggered the final move downwards in 2008 for the S&P 500. And as at this point in time, since the structure is so similar, we don't really have much reason to believe that something like that won't happen, especially with rates still rising. So let's go ahead and pull up the fractal, and then we can look at rates in regards to the S&P, and we'll tie it back into Bitcoin. So taking a fractal from that region, as you can see, and applying it over on the logarithmic chart, you can see the structure is quite similar. If we just manipulate it a little bit and make it look a little bit better, we can see, yeah, it's quite similar structure here. Obviously it's not perfect, but it is quite similar, and that's very much worth noting. I also want to go back quickly to 2008 and look just before. So we had a def cross here in 2008, and then back here in actually 2001 during the dot-com bubble, same thing happened. We saw the def cross on the 3-day chart, saw a massive correction based on that. Again, that had similar structure, rounding top formation. So yeah, look, there's based on that, and also based on interest rates, and we can look at that right now. There's no reason really to believe that the S&P 500 has seen its bottom. Interest rates are still rising in the United States of America. Yes, we will be seeing a decrease in magnitude of the rate hikes coming shortly, possibly by the end of the year, but they still will be rising for at least 3 more months. And then they will maintain at that high level for, at least 6 months. And this is as per the market's expectations. These aren't my predictions. This is what the market is saying at this point. And look, if we look historically, the S&P 500, all you need to do is look at this chart here. The S&P 500 has never actually bottomed out while interest rates are rising. interest rates are rising, S&P has always been correcting. It's never bottomed out while the rates are rising. It's only bottomed out when the rates have started to come down. Right now, rates are still rising. As I said, they're going to be rising for another 3 months minimum. So, and that's not me. That's the market saying that. So, you know, for the S&P 500 to bottom here, it would be the first time in 50 years, right? And the only time in 50 years that that's ever happened. It's the only time in 50 years that the S&P 500 would ever bottom out while rates are hiking. And, you know, so if you believe that, then you would believe that the S&P needs to go down further, and then you would be more likely to believe that this is a fake out on Bitcoin, you know, with, you know, just by extension. So I think, you know, there's a lot of evidence here for Bitcoin that would suggest that this is not necessarily a primed move. And even if we do break 20.8k, as I said, it's still not a macro reversal, because we've still got all this stuff going on in the macro. You know, macro reversal, a proper, true macro reversal would be 28.6k. Until that happens, or until we reach 2023, I would not be confident that the bottom was in. I just simply would not. Now, look, again, that doesn't mean I won't buy it. It's just as it is, as I said just then. Doesn't mean I won't buy it. It just means I wouldn't be confident in a macro reversal. It would be a short-term swing trade or a medium-term swing trade. We've got a few charts here as well that I want to look at in terms of on-chain. These are the most important charts I'm seeing on the on-chain data right now. We've got the correlation between Bitcoin and Ethereum basically at a low that we haven't seen for 11 months, which is very interesting as Ethereum skyrockets to the upside. We can see on this Ethereum chart here, Ethereum's broken resistance quite heavily, and it's on the move to the upside. Again, it's heading into resistance just like Bitcoin though, so it hasn't necessarily fully confirmed so, you know, a massive break or anything like that, but it definitely has broken a major downtrending line. It definitely has been considerably more bullish than Bitcoin since it had its what was called the merge, the Ethereum merge. Sorry, that name just slipped my head for some reason there. Yeah, and it's been quite bullish, so that's good. And that's why the correlation between Bitcoin and Ethereum has gone down quite significantly to an 11-month low there. I don't think that's necessarily an indicator that Ethereum and Bitcoin are disconnecting permanently. I think it's just a natural development and price action generally happens at the bottom of each bear market and the top of each bull market. What we have as well is the realized volatility for Bitcoin on a 1 month basis, reaching lows we haven't seen since 2020. Which means Bitcoin's volatility is extraordinarily low at this point in time, still even with this move. We also have futures to spot ratio going up. Therefore, you know, more people are taking leverage positions, less people are taking spot positions, which is interesting as well, which kind of explains, you know, the lack of volatility and will explain a massive move when it does come, or potentially it might have even started already. Let's see. And we also have on-chain data, on-chain transactions on Bitcoin, on-chain activity in general, reaching basically lows we haven't seen since 2011. So the activity in crypto right now is extraordinarily low. Volatility in general, not only on Bitcoin, but across the entire market, is extraordinarily low. Bitcoin is currently less volatile than the NASDAQ, and on-chain activity is extraordinarily low. There is absolutely zero interest right now in cryptocurrency, and I think that will be coming to an end very shortly if it has not done so already. Let's see what happens with this move. Let's see if it breaks 20.8k. That is very much a critical level for a medium-term swing to begin, and we'll have to get into it after that. But at this point in time, I'm still confident that we will be seeing a Q4 bottom. So, look, with that said, we'll end the video there. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video. Cheers.